Trading in the Zone, written by Mark Douglas, is a psychological guide for traders that explores the mental discipline required for successful trading. Douglas emphasizes that trading is not just about analyzing markets or employing the right strategy. It's about mastering the psychological challenges that come with financial markets. This book shifts the focus away from typical trading advice and instead zeroes in on the trader's mindset, particularly on how they perceive risk, probability, and uncertainty. Below is a 1,000-word summary that captures the key concepts and lessons of trading in the zone. Introduction: The psychology of trading. Douglas opens by addressing the fundamental difference between the successful trader and the novice mindset. He argues that success in trading is not necessarily about having the best strategy or the most market knowledge, but about developing the mental discipline to handle the emotional challenges that come with trading. He introduces the idea that financial markets are inherently unpredictable, and that the real obstacle to success is not the market itself, but the trader's own psychology. Chapter 1: The Road to Success. Fundamental and Technical Analysis. Douglas explains that many traders start with the belief that either fundamental or technical analysis will give them the edge. They need to beat the market. While these methods can provide useful information, they are not guarantees of success. The author highlights that no amount of analysis can remove the element of risk or uncertainty from the markets. He argues that traders often develop a false sense of security from their analysis, which can lead to overconfidence and ultimately losses. Success in trading comes not from finding a perfect method, but from accepting that uncertainty is always present. Chapter 2: Consistency, a State of Mind. The central theme of trading in the zone is achieving consistency in trading results. According to Douglas, consistency is the result of having the proper mindset, which he calls the winner's mindset. This mindset is characterized by the ability to stay emotionally detached from individual trades and view trading as a probabilistic game. Traders must accept that each trade has an uncertain outcome, and that losses are an inevitable part of the process. A key factor in achieving consistency is learning to think in probabilities and managing risk without emotional attachment. Chapter 3: The Market's Perspective. Douglas encourages traders to shift their thinking from their personal perspective to the market's perspective. The market is a collective expression of all the participants, and no single trader can predict its moves with certainty. By understanding that the market has its own behavior and logic, traders can learn to adapt and flow with the market rather than attempting to impose their expectations on it. This approach requires humility, patience, and a deep acceptance of market unpredictability. Chapter 4: Understanding Risk. A significant portion of the book is devoted to the concept of risk. Douglas asserts that most traders have a flawed understanding of risk, and this leads to emotional and psychological distress. He emphasizes that traders must develop the ability to take risks without fear. This means accepting the possibility of loss without letting it affect one's emotional state. By focusing on managing risk than on the potential for profits, traders can remove the fear of losing, which is one of the greatest obstacles to success. The key to understanding risk, according to Douglas, is realizing that no single trade defines a trader's success or failure. It's the long-term outcome of many trades that matters. By internalizing this, traders can detach emotionally from individual trades and maintain consistency in their approach. Chapter 5: Thinking in Probabilities. Douglas introduces the concept of thinking in probabilities, which is crucial for developing a winning mindset. In trading, outcomes are never certain, and every trade has only a probable, not guaranteed, result. The author suggests that traders must adopt a probabilistic mindset, meaning they understand that any given trade is just one event in a large series of trades. The goal is not to predict the outcome of every trade, but to ensure that over a series of trades, the trader's strategy yields more wins than losses. To think in probabilities, Douglas explains that traders need to 1. Accept that anything can happen. The markets are unpredictable, and no trade is ever certain. 2. Embrace uncertainty, instead of fearing the unknown. Traders should welcome it as a normal part of the process. 3. Focus on the long term, rather than obsessing over individual trades. Traders should think in terms of probabilities and focus on their overall success rate over time. Chapter 6. The 5 Fundamental Truths of Trading. Douglas presents 5 key truths that traders must internalize to develop a winning mindset. 1. Anything can happen. No one can predict the markets with certainty. 2. You don't need to know what will happen next to make money. Success comes from executing a plan, not from predicting every market move. 3. There is a random distribution between wins and losses. Even a great trading strategy will have losses. It's the overall results that matter. 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. Having an edge does not guarantee success in every trade. 5. Every moment in the market is unique. No 2 trades are the same, and each moment in the market is influenced by different factors. By understanding and accepting these truths, traders can free themselves from the pressure to be right on every trade and focus instead on executing their strategy consistently. Chapter 7. The Trader's Mindset. Douglas stresses the importance of developing a mindset that is free from fear and greed. He explains that fear causes traders to hesitate, second-guess their decisions, and deviate from their plans, while greed drives impulsive decisions and overtrade. Successful traders must cultivate emotional balance and self-discipline. The author suggests that the key to developing this mindset is to focus on the process of trading, rather than on the outcome of individual trades. Chapter 8. Managing Emotions and Mental States. Emotional control is a major theme throughout Trading in the Zone. Douglas argues that traders often sabotage their own success due to emotional responses like fear, greed, overconfidence, or frustration. These emotions cloud judgment and lead to impulsive, irrational decisions. To manage emotions, Douglas suggests creating a structured trading plan that removes emotion from the decision-making process. Sticking to this plan, even during emotional highs and lows, is crucial for success. Conclusion. Achieving consistency. In the concluding sections of the book, Douglas reiterates that consistent success in trading comes from mastering one's mindset. He advises traders to adopt a probabilistic way of thinking, manage risk effectively, and remain emotionally detached from individual trades. Trading is not about predicting the future, but about executing a strategy with discipline and patience over time. Ultimately, Douglas's message is that the only true edge a trader can have is mental discipline and emotional control. Trading in the Zone offers a deep exploration of the psychological barriers that prevent traders from achieving success. It emphasizes that trading is a mental game, and by mastering your mind, you can achieve consistency and profitability in the markets.